Imagine this: every major bank on Wall Street, Goldman Sachs, JP Morgan, Morgan Stanley, is pouring billions into one thing. Not oil, not gold, not even crypto, but artificial intelligence. The same technology that writes your emails, generates art, and predicts your Spotify playlists is now shaping the future of the global financial system. But the question is, why? Why are the world's biggest investors betting trillions on AI? What do they know that the rest of us don't? Well, today, we're going to uncover the real reason Wall Street is going all in on artificial intelligence, from secret algorithmic trading systems to AI-powered hedge funds, and what this massive money movement means for the future of our economy. In 2023, Goldman Sachs made a bold prediction. Artificial intelligence could boost global GDP by 7%, adding nearly $7 trillion to the world economy within a decade. That number got everyone's attention, because when you talk about trillions, Wall Street listens. Fast forward to today, and AI isn't just a buzzword anymore. It's a full-blown gold rush. Major investment firms are creating entire departments dedicated to machine learning. Hedge funds are hiring AI engineers faster than analysts, and venture capitalists are throwing record-breaking sums at startups building anything remotely connected to AI. To understand what's happening, we need to step inside the mindset of Wall Street, where every technological shift is an opportunity to gain an edge. AI isn't just another tool for them, it's the next financial arms race. In this video, we'll break down why AI has become Wall Street's new obsession, how they're actually using it to make billions, the quiet risks no one is talking about, and how this trillion-dollar bet could reshape your future, even if you've never touched a stock. 1. The data war. Why Wall Street needs AI. At its core, Wall Street runs on one thing: information. Stock prices, earnings reports, news headlines, social media chatter. Billions of data points flood the market every second. Humans can't possibly process all of it. That's where AI comes in. AI systems can analyze thousands of variables across global markets in milliseconds. They don't sleep, they don't panic, and they never get tired. For investment firms, that's the dream. Take JP Morgan, for example. They've developed AI models that can detect patterns in global trading behavior before the rest of the market reacts. Goldman Sachs uses natural language processing to scan news articles and tweets to gauge public sentiment on stocks. Even small hedge funds are deploying predictive algorithms, AI systems that study years of financial data to forecast market movements with astonishing accuracy. In short, AI has become Wall Street's most powerful weapon in the war for data dominance. And in a world where 1 second of delay can mean losing millions, AI gives firms a superhuman edge. 2. The rise of AI hedge funds. You've heard of traders yelling on the floor of the New York Stock Exchange, but that image is becoming outdated. Today's real traders don't wear suits. They sit behind computer screens, writing code that tells machines when to buy and sell. In fact, many of the top-performing hedge funds in the last decade have been AI-driven. One example is Renaissance Technologies, the secretive hedge fund founded by mathematician Jim Simons. While not purely AI, their use of machine learning and advanced algorithms has generated annualized returns that outperform nearly every human investor alive. Then there's Two Sigma and D.E. Shaw, firms that rely almost entirely on machine learning and artificial intelligence to make investment decisions. Together, they manage hundreds of billions of dollars, and a new generation of funds, like Numerai, are taking it even further. Numerai crowdsources AI models from data scientists around the world, combining them into a meta model that trades on global markets. It's like a decentralized AI brain managing millions in assets. These funds have proven something powerful. AI doesn't just assist traders, it replaces them. Wall Street isn't betting on AI because it's cool. They're betting on it because it works. 3. AI in banking, from risk to reward. It's not just hedge funds. Traditional banks are using AI in almost every part of their operations. Risk management. AI models can predict loan defaults before they happen, saving billions in losses. Fraud detection. Machine learning algorithms can spot suspicious transactions in real time. Customer service. Chatbots powered by large language models are now handling millions of customer interactions. But the real excitement comes from AI-optimized investment portfolios. Systems that automatically balance assets based on your risk profile, market trends, and even emotional behavior. It's the next evolution of personal finance, AI wealth management. And firms know that whoever builds the best AI model will dominate the next generation of investors. That's why companies like BlackRock, which manages over $10 trillion in assets, are investing heavily in AI tools like Aladdin, an internal system that analyzes market risk across thousands of portfolios. Think about it, a single AI system guiding trillions in investments. This isn't the future, it's already here. 4. The AI startups Wall Street is chasing. When Silicon Valley meets Wall Street, sparks fly. Major financial institutions are pouring billions into AI startups, not just to profit, but to gain early access to cutting-edge tech. For example, OpenAI's valuation skyrocketed past $100 billion, partly because financial firms realized how large language models could reshape financial analysis. Startups building AI trading platforms, data analysis tools, and fraud detection systems are being bought up almost as fast as they launch. Venture capital firms like Andreessen Horowitz and Sequoia Capital are quietly backing AI fintech startups that promise to democratize investing. But make no mistake, the real winners are the firms who own the algorithms. Wall Street's message is clear. If AI can predict the next viral TikTok, maybe it can also predict the next stock market boom. 5. The hidden risks no one's talking about. But here's where things get complicated. When you hand control of trillions of dollars to machines, what happens when those machines fail? Financial AI systems aren't infallible. They're trained on historical data, meaning they can make catastrophic mistakes when something unpredictable happens. Remember the 2010 flash crash? In just 36 minutes, the Dow Jones plunged nearly 1,000 points because of automated trading algorithms gone haywire. Now imagine that, but with AI systems infinitely more complex, connected, and powerful. Experts warn that we could see AI-driven financial bubbles, where algorithms feed off each other's predictions, artificially inflating markets. There's also the issue of bias. If AI is trained on biased or incomplete data, it can make unfair or inaccurate financial decisions, like rejecting loan applications or misjudging market risk. And let's not forget privacy. Financial AIs require massive amounts of data. That means Wall Street now holds even more personal, behavioral, and financial information than ever before. AI has made finance faster and smarter, but also more fragile and less human. 6. The global domino effect. The influence of Wall Street's AI obsession doesn't stop in New York. From London to Singapore to Dubai, global markets are following suit. Central banks are experimenting with AI to monitor inflation and predict recessions. Even government agencies are using AI to track insider trading and financial crimes. This global shift is creating what some economists call the AI financial order. In this new system, whoever controls the best algorithms, controls the flow of money. It's no longer about who has the most cash, but who has the most data. AI has turned financial power into a technological competition, one where every nation, corporation, and investor is trying to stay ahead of the curve. So, why is Wall Street betting trillions on artificial intelligence? Because AI is no longer just a tool, it's the engine of the modern financial world. It analyzes data faster, trades smarter, and predicts market shifts before most humans even notice. For Wall Street, that's not just valuable, it's priceless. But as AI continues to dominate global finance, we have to ask ourselves, are we building a smarter, more efficient economy? Or one that's too dependent on machines to make the right call? Because in the end, when trillions of dollars move at the speed of an algorithm, one small glitch could trigger the next financial earthquake. Wall Street believes AI is the future, and they're willing to bet everything on it. But as history has shown us, every financial revolution comes with a cost. The only question is, who will pay it this time? The machines or us?